What if I told you, you pay more tax than Amazon? Weird, isn't it? How's that possible? Stay tuned to find out how. In 2018, Amazon paid $0 in US federal income tax on more than $11 billion in profits before taxes. It also received a $129 million tax rebate from the federal government. So not only did they not pay tax, but they got paid by the government for not doing so. But before we get all Hulk on them, it should be noted that it was all legal. Amazon's low tax bill mainly came from the Republican tax cuts and carryover losses from years when the company was not profitable, among other factors. Jeff Bezos' company is not the only corporation getting money back from the federal government. And not exactly a brand new trend. For example, General Motors reported a net federal income tax benefit in 2018. Companies as diverse as Southwest Airlines and Goldman Sachs also reported similar benefits in certain years since 2008. In a statement to CNBC, an Amazon spokesperson said, "Amazon pays all the taxes we are required to pay in the US and every country where we operate, including paying $2.6 billion in corporate tax and reporting $3.4 billion in tax expense over the last 3 years." So where did the mishap or misinformation occur? This issue of Amazon not paying tax came front and center on a local, state, and global level in New York during the saga of Amazon's HQ2 hunt, with a groundswell of local opposition scuttling the deal. Amazon's decision to pull HQ2 out of New York City reignited a debate about why the company pays no taxes. First of all, a quick look at Amazon's financial statements shows it does pay taxes. In 2017, Amazon paid close to $1 billion in income tax. In 2018, the amount jumped to $1.18 billion, accounting for local, state, and international taxes. Amazon pays plenty in terms of payroll taxes and also state and local taxes. Nor should you forget the taxes paid by Amazon's employees on their wages. Not only is that direct revenue to various levels of government, but the incidence of those taxes falls somewhat on Amazon, which now must pay higher wages to offset the tax burden faced by their employees. But it is true that Amazon did not pay federal taxes. It's odd to think that you paid more federal tax than Amazon. But before yelling partiality, it is worth understanding why. A more thorough examination of the underlying economics shows us the loophole Amazon uses to escape the jaws of taxes. A loophole known as incentives. Incentives, in layman's terms, is a lot like free money. Incentives, to an economist, operate as a handle to generate a better result which offsets the cost. Taxes are usually interpreted only by their first-order effect of generating revenue, rather than the second-order effect of stimulating economic activity. Taxes basically is a contribution made by everyone to help the economy or country they are in. Taxes is why we have good roads, have paid government workers and all that. It will be unfair if one person was tasked as the person to provide money for all these. But the main purpose of taxes is to have a revenue system that is government officials can use to stimulate economic activity and growth. Keyword on stimulate economic activity and growth. If you look at the Internal Revenue Code, as one CPA cites, less than 1% of it is dedicated to revenue generation. The majority, in fact, is on tax deductions. There are only about 30 pages in the code that actually raise revenue, and there are about 6,000 pages that tell you how to reduce taxes through tax deductions, tax credits, and other incentives. Tax deductions can be incorrectly categorized as crony capitalism. But tax deductions, tax credits, and other incentives act as an important driver for organizations to stimulate economic activity, job creation, and innovation. And that's what Amazon's leverage on. There are 3 main drivers of Amazon's tax breaks: investment in research and development. Amazon invests heavily in research and development and therefore benefits from the tax credit. In 2017, as Recode stated, Amazon topped the list of US companies in RAND spending, reaching $22.6 billion. The next closest was Alphabet at $16.6 billion. And many of Amazon's innovations have been birthed from this investment. Second one is investment in property, plant, and equipment. Amazon's investment in property, plant, and equipment also makes it eligible for tax credits. Cities can benefit from Amazon's investment in real estate and job creation, benefits New York City could have enjoyed. Amazon's PPE expenditure has steadily increased over the last 5 years, surpassing $60 billion. Lastly, employee stock compensation. A move away from cash compensation to stock-based compensation for employees is the third driver of its tax breaks. Tax deductions increase as the stock increases. While this can certainly create adverse incentives, it is important to assess the benefits it creates relative to the cost. While such a tax policy can introduce misaligned management incentives, it also generates incentives for management to drive the best possible return for investors. Amazon largely pays no corporate tax precisely because it reinvests those profits into its operations. Under a scenario where Amazon had no corporate tax breaks, it would discourage the company from reinvesting and thus creating greater opportunity for the businesses and cities in which it operates. Also, during that time, Bezos avoided paying federal income taxes in those 2 years by losing more money investing than he earned from other income, according to a report. In both years, the report said, Bezos paid nothing in federal income taxes by citing investment losses greater than the amount he earned from various income streams, stock dividends, salary, etc. If that was a ploy to avoid the tax or bad investment advice, we don't know. For the years he did pay federal income taxes between 2006 and 2018, Bezos paid a total of about $1.4 billion on a reported income of $6.5 billion, or a rate of about 21.5%. That reported income does not include the vast increase to his net worth during the same period, about $127 billion, according to Forbes, due to his stake in Amazon. Billionaires like Jeff Bezos and Bill Gates derive little wealth from their annual income. Instead, much of their net worth is tied to stock holdings. Bezos, for example, owns a 10.3% stake in Amazon that's valued at about $170 billion. The majority of Bezos' net worth, $170 billion, is tied to Amazon stock, which fluctuates regularly and has even left the billionaire competing for the world's wealthiest title with Tesla CEO Elon Musk at times. At least $19 billion of Bezos' wealth is not tied to his stake in Amazon. Bezos can skip paying taxes on his accumulated wealth from the Amazon stock because stock gains aren't taxed until they are realized by selling off the stock. He's sold some of his shares in the past for massive gains, $5 billion earlier this year, $3.1 billion in August 2020, and just shy of $2 billion the prior August. He's also said that he sells about $1 billion in shares annually to fund his space rocket company, Blue Origin. It's unclear what taxes he paid on those sales. By any measure, Amazon's growth in the pandemic year was remarkable. Its worldwide pre-tax income for 2020 was $24 billion, up 73% from the $14 billion it enjoyed in the last pre-pandemic year. Its sales were up 38% over the prior year during the pandemic. The company's U.S. income in 2020 was $20 billion. If Amazon had paid 21% of its profits in federal income tax, that would have come to $4.1 billion. But the company's reported current tax of $1.8 billion was less than half that, meaning last year Amazon avoided $2.3 billion in taxes. Over the first 3 years of the Trump GOP tax law, which dropped the statutory corporate tax rate to 21%, Amazon paid an effective federal income tax rate of just 4.3% on U.S. income. From 2018 through 2020, Amazon enjoyed tax subsidies of $7.2 billion. Which is what the company would have paid if subjected to the full 21% rate. For any other company, $1.8 billion of current federal income taxes would be interpreted as a sign the company's tax accountants had taken the year off. But in Amazon's case, the $1.8 billion the company paid is overshadowed by the $2.3 billion it did not pay last year. These unpaid taxes are especially troubling because Amazon's pandemic experience is utterly different from the existential threats facing other industries. Far more typical of the 2020 economy is companies reporting low sales and zero profits. In this setting, it's vital that maybe the tax system should perform more as expected, as Amazon shelters more than half its profits from tax. The mechanisms the company is using to drop its effective tax rate are mostly unchanged. The company saved $1.8 billion using tax breaks for stock options, and it saved $639 million using various tax credits. Over the 2018 to 2020 period, Amazon also enjoyed depreciation breaks, although they had no net effect on the company's tax bill in 2020. Depreciation breaks allow a company to deduct the costs of investments in equipment much more quickly than the equipment wears out. Proponents in Congress claim this encourages investment and helps the economy overall, but more likely it rewards companies making investments they would have made anyway. The effects of depreciation breaks are complex. Part of the effect is to move tax payments further into the future, even though the net effect, in the long run, reduces the company's tax liability. This makes it important to look at a company like Amazon over several years, and from this perspective, it's clear that the nation's tax code barely lays a glove on Amazon. Elected officials, progressive activists, and academics frequently take aim at Amazon for reportedly paying nothing in federal income taxes. Researchers and journalists came to that conclusion by calculating the tax deferrals and credits Amazon is eligible for. They might be right about the unfairness, but only if used in the right context. Raising a pitchfork to fight Amazon's corporate tax breaks is fine if the argument is rooted in strong economic reasoning. The building impetus to tear down existing economic structures without a strong grounding in why the structures even exist could land us in a worse position. Inasmuch as Amazon might be doing the wrong thing, or might just be very smart in avoiding taxes, the problem is not with them. Because they are following the law and avoiding tax bills legally. The question to address is not why Amazon pays no taxes, but under what tax structure could we be better off. We hope you enjoyed this informative video. Don't forget to hit the like button and the bold red subscribe button to subscribe to our channel for more great videos like this one. Thanks so much for watching. See you next time.